the housing market is a lot healthier than it has been in the past. I'm going to give you 3 reasons why next. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team to talk about how this information may impact your plans, whether it's buying or selling over the next 6, 12, 24 months, you can do that with the link in the comments. There's 3 reasons behind the healthier market that we're seeing in 2025. One is the growth in home sales. 2 is the increase in inventory and the growth in home prices. And 3 is the increase in purchase applications. I'm going to be sharing some charts here so you can see exactly what I'm talking about. And the backstory here is that the market was very unhealthy in 2022, 2023, and started to recover last year because there was just so little inventory out there. That's not good for anybody. I'm very pro inventory because you want to give people choices and options. And it made the market savagely unhealthy, according to Logan Mohtashami from Housing Wire. Now, with these 3 factors, we're seeing a much healthier market. So the first is the growth in home sales. So last year, we ended up selling just about 4 million properties is what ended up transacting for 2024. Well, we're seeing that every single week this year, we are on pace for just above that number in 2025. And all the monthly data that we're getting is exceeding that 4 million annual homes sold number. But it's important to note that the weekly pending sales data, and I'm going to show you this chart here, is it just recently surpassed the trends we were seeing in 2024 in the month of April. And that's showing the real growth because that's the lead indicator. It's not when homes settle. It's when they go under contract. That's when we know what's actually going on in the market in real time. Unlike the National Association of Realtors, who uses lagged data constantly. So if you look at this chart here, you can see we're now trending ahead of where we were in 2024 and in 2023. Now, 2022, we started off hot, but then there was no inventory or really just savagely unhealthy inventory levels. And that's a notable surprise here and a major plus that we're seeing sales start to trend ahead in the time of year that we usually do that. And what's interesting is that rates haven't fallen that significantly, and we're still seeing that kind of positive trends. That indicates there's intent in the market, there's demand in the market. So if you're a seller and you're wondering what the economic turbulence that we're seeing right now and all this tariff talk means, well, the data shows that there's plenty of homes that are selling. For buyers, it means the same thing. And maybe there's some people that are a little nervous about this economic turbulence that we're seeing or the uncertainty that's out there. It might be an opportunity for you to jump into the market to get a home now rather than when things calm down a little bit and more competition could jump in the market. So there's some positive news here for buyers and sellers. Point number 2 is that purchase application data is up. So I'm going to, again, share another chart here, and you can see where we are compared to last year when you look at 2024 versus 2025 mortgage purchase applications. Now, this index is important because you cannot file an application unless you have an executed agreement of sale. Yes, people get pre-approved and pre-qualified all the time. This is about the actual application, and we're seeing consistent year-over-year growth with this. And besides a couple weeks in, February and the beginning of March, we are way ahead on a weekly basis of what's happening with mortgage applications. And that tells you that even with rates sticking around 7%, there's still demand for housing out there. So that makes it very healthy. So again, sellers, if you're worried about the economic turbulence and some of the talk coming out of Washington, the data is showing there's a lot of demand. And lastly, the third point here is housing inventory and price growth. So, a lot of people have predicted prices are going to go up maybe 1.77, 2% this year. In our market, the number is likely to be in that 3 to 6% range, depending on where you are, because there's less inventory available in the Northeast and in the greater Philadelphia area. These national numbers are likely low when it comes to price appreciation. This is slower than what we saw in 2020, 21, and 22, where we were close to 10% price growth, which is very incredible when you look at it. And we're seeing a slowdown in the growth, a normalization in the growth of prices, which is good news. And the increase in inventory is very promising. If you look at this chart here, this is the last one, we're seeing 32% more single family home inventory on the market right now so far this year. In our local market, we're seeing a 26.3% increase in inventory. And when you see this price growth and when you see this inventory growth, well, a lot of folks have been worried prices were going to go down. And the big complaint among home buyers is there's not enough inventory. The more inventory that's out there is going to unlock some homes that people are trying to find. It's going to get some of these folks that have been sitting on the fence to actually make a move. So what we're seeing is a lot of positive data here. And if you're a seller, I'm monitoring inventories growing. Is it still a seller's market where I'm located? Obviously, that's yes in the greater Philadelphia area. But if you're watching this and you're from another part of the country or you're in some isolated pockets of the market, you've got to look at your local competition. I'm seeing that rates aren't really going down and prices are continuing to climb, and there's still a lot of demand in the market. And demand and supply, this is supply and demand. When there's low supply and high demand, it's a good time to sell. So that's what I'm looking at if I'm a seller right now, and obviously knowing where you want to go, that's probably the most important thing. From a buyer's perspective, I'm noticing the rise in inventory. I'm also noticing that rates aren't going to be coming down. There are predictions out there. We're going to see 6.34% on average of the 27 predictors that are out there by the end of the year. If you find the right home and the payment makes sense for you and you can get the property that you want and it's a place where you're going to be at least 5-7 years, then that may be your right timing. It's got to be right for you and your household and everyone involved. I'd be on the lookout as we see inventory rise and making sure I'm getting updated to the minute with new offerings to the market. There's a lot of data to unpack here, so if you need help understanding it or you don't know what it means for you, reach out and schedule a call with our team with the link in the comments.